Tesla is not just a car company, but it's a vision for the future. A future where EVs, solar power, and battery storage are the norm. A future where innovation, sustainability, and profitability all go hand in hand. This is the magic Tesla plans to create, and it's interesting to see how investors are taking advantage of this once-in-a-lifetime opportunity.
It's Tesla. The shares are jumping. We did have a batch of upbeat news driving sentiment on Wall Street, including a note from Morgan Stanley's Adam Jonas. Pras Subramanian's here with the details. And we were talking a little bit about this note earlier, but it's very interesting that he looks at this company, and I guess he has for a while, as bigger than just cars.
Yeah, beyond an auto company is what he's sort of saying. There's a way to drive his bull case, I guess, for the shares of the company next year in 2024. Looking ahead to things that are non-auto, non-core is what he says to the business. And it's funny because he mentions in the note later on that he has got significant pushback from clients about this, and he still, hey, you know what? No, I'm a true believer in this stuff. Like, for instance, Optimus robot, Tesla adjacent technology, tech that could upend the label market, Dojo supercomputer. We talked about this before. The supercomputer that can be used for any number of purposes like AWS, in that sort of a realm of possibilities for the Amazons, for huge EBIT mover with AWS. Also noting their edge AI. Imagine your car is a robotic edge AI device. Beyond just collecting information for FSD, imagine the key for your car is a phone, for instance, a Tesla phone, right? Stuff like that. I also want to note the EV infrastructure kind of boost there. As GMs and the Fords of the world pulled back on spending, Tesla can step up on new spending for AI, for FSD, for their supercharger network, which they're using legacy OEMs for, that sort of thing.
And how much Pras is also the bullishness there, because is his bet also in part he's looking at rivals who are kind of pushing out these EV-related investments and saying, okay, that's runway for Elon Musk?
Right, as the legacy guys pull back, gives you an opportunity to push in and spend more and gain more market share in those Tesla car adjacent stuff, right? Software, supercomputing, and the EV infrastructure stuff like the charging networks we're talking about. That's sort of a big deal there. But I just want to note that it's funny because not funny, but it's his model for 2030 and beyond includes these services as being a huge factor in Tesla's profitability and revenue growth there. So it's something that we've seen other bulls like Dan Ives talk about that as well. It's just so far out that I think that's why clients are saying, hey, what about next year?
Well, next year he says auto margins are going to go down.
Yeah,
They're going to be lousy.
Potentially negative operating margin, which is that's the first I've heard of that, but he's still noting that and saying, hey, you know what? Look to the long term, not just 2024.
Tesla has revolutionized the automotive industry with its EVs, autonomous driving, and battery innovations. But Tesla is more than just a car company. It's a diversified energy company aiming to accelerate the transition to a clean and renewable future. Just like several other analysts, Morgan Stanley has delivered the huge potential behind Tesla's business model and has once again dropped a bullish forecast on Tesla and its stock. The American Investment Bank recently predicted that Tesla can deliver up to 2.25 million cars for 2024, coupled with price cuts and falling margins. But that's not even the interesting part. Morgan Stanley analyst Adam Morgan has also revealed his firm belief that Tesla will continue to make partnerships with world leaders to not only expand its gigafactories but also secure supplies of battery materials. But why is the investment firm so bullish on Tesla? Let's find out.
And as we look at what's going to be happening with some of these tax incentives coming off, when you look at Tesla, what does that mean for the competitive space here? When you look at, you have established Tesla, you have some of these legacy brands as well, but you also have some of these startups and people are sort of hopping onto these trends, starting to fall by the wayside.
Yeah, and that's really a big element because tax incentives that are driving a lot of these sales are shifting around. They shifted a bunch when the Inflation Reduction Act went through, and then they're shifting again on January 1st in some ways that are helpful for some companies and more hurtful for others. It appears that Tesla is going to be losing its tax benefit, the $7,500 credit, on January 1st, which seems odd because it's based on domestic production and Tesla's a very domestically oriented company. I've heard theories from people that suggest there was maybe maybe they didn't fill out the paperwork right. They want this to happen, telling everyone, oh, we're losing the $7,500 credit on the January 1st, better buy your car now. And then maybe January 5th, January 10th, there's a application process. Oh, wait, we just didn't dot the right I or cross the right T. We've got the $7,500 credit back. Not that Tesla or Elon would ever, maneuver a stunt like that to sell more cars, but some people are suspecting that could happen.
With that said, though, affordability has been a big issue in terms of adoption. Tesla, a lot more affordable with that $7,500 tax credit. We just showed the market share. 56.5% is what Tesla has right now. How does that shift without those incentives? Who do you think is likely to become a bigger player in 2024?
I think, Ford is pretty well positioned right now. GM needs to be building more cars. They keep launching cars, but not really building them. And then I feel like the Koreans are building some of the best EVs on the market right now, but they don't get the incentive either unless you lease. So it's actually, I don't really see any obvious benefits for any companies. Every one of them is facing some challenges. You've got incentives issues, you've got market issues, you've got pricing issues, macroeconomic factors that are slowing down the purchase of electric vehicles. I don't know. It's hard for me to think who would jump into any vacuum created by Tesla, but I would argue that we've seen Tesla's share, you're saying it's about 56, they're down to about half the market. And of course, they were the overwhelmingly dominant player just a few years ago. Every day, every month, every year, we see more cars entering this marketplace, making them less dominant.
At the end of 2020, Tesla delivered about 500,000 vehicles and has had its net income for the full year at $903 million. Only a few would have predicted that by 2023, Tesla would deliver mostly the same number of cars in just one quarter. Tesla's second quarter deliveries came in at about 466,000. Even more, net income came in at $2.7 billion for the 3 months, dwarfing Tesla's annual income just a few years ago. Sure, many will dwell on the fact that Tesla has significantly reduced the prices of its vehicles this year to aid its sales growth in the face of rising interest rates. But when investors zoom out a few years from now, well, it's easier to appreciate the magic of what Tesla's done and all that it's achieved so far. Hey guys, welcome back to Tesla Tomorrow. Tesla is a company that is well known for its exciting lineup of products and business models, all of which have proven to be a huge success over the years. The company has established itself in several business sectors, reporting impressive numbers in revenue quarter after quarter. This diversity in Tesla's business model has been the major driver of its growth. If you look at it, Tesla has not only succeeded by being an EV manufacturer, but it's also made significant gains from energy, FSD, insurance, and even superchargers. All of these make up Tesla's valuation, and it will collectively send Tesla stock to a whole new level in the future. But how will this happen? Let's find out. Before we carry on though, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. For most Tesla investors, EV sales are the headline numbers on a company's balance sheet. But if Elon Musk is to be believed, another part of Tesla's business model could also account for a significant chunk of its profits. For instance, Tesla has its own insurance business, which is also thriving. According to Elon Musk, Tesla is looking to offer insurance nationwide and eventually internationally on its vehicles. The Tesla CEO said this during the company's annual shareholder meeting. Aside from generating revenues from its business, providing auto insurance to customers helps Tesla solve two problems at the same time. First up, it reduces its overall cost of insurance for Tesla vehicles. Second up, Tesla's insurance business could also boost sales of its cars by reducing the overall cost of ownership. Similarly, while Tesla's EV flagship segment has generated a large percentage of the automaker's revenue, the energy generation and storage segment has also contributed significantly to its margins. This fast-growing business deserves more attention because it's on track to continue to account for a larger percentage of Tesla's overall sales and profits. And then there's Supercharger. After Ford adopted Tesla's NACS standard, several other car companies have followed suit.
And Carl, as we increasingly look at Tesla, almost more so as a tech company than a car company here, what does that mean in terms of expectations for next year and how it's positioning itself?
Well, they've got the Cybertruck coming, which a lot of people would love to think is going to tap into this highly profitable, massive volume truck market that Ford and Chevrolet and Dodge and Ram have been benefiting from for decades. I don't know if that's really going to work because the truck is very expensive and it looks like it's not very profitable for them, and it looks like they're going to take a while to ramp production. So I feel like they're not going to just be this natural. Plus, we've seen a lot of people in the truck market kind of pull back on buying these trucks. When they started using them as real trucks, they didn't seem as attractive. What I would say is kind of Tesla's ace in the hole or ace in the PowerPoint maybe is the supercharger network. That was a brilliant move for Elon to invest in that. Now we're seeing all the other car companies transition to the plug type that he's got in that supercharger network, and he's starting to open it up to other companies and other cars. He could end up with quite the subscription model if he becomes the dominant player in the infrastructure and power supply field.
Nissan recently announced that it had reached an agreement with Tesla to adopt the North American charging standard beginning in 2025, providing Nissan customers with even more choices when it comes to charging their vehicles. Just like other companies, in 2024, Nissan will provide an adapter for owners of their EVs who have a CCS charging port. Once 2025 hits, new Ariya SUVs should come with the NACS outlet built in. The same goes for EV buyers in the United States and Canada. According to the company, this move will make charging the Tesla supercharger network a seamless experience. And the convenience for drivers cannot be understated, significantly increasing the number of public fast charging locations for which Nissan EVs can be charged. Do the bears even realize how big this is? We doubt it. For one, Nissan has a long, committed history with the CHA-MO fast charging standard. And then finally, it gave up on it with the Ariya SUVs because everyone else in the industry had also switched over to CCS. Therefore, for Nissan to consider switching to Tesla's NACS charging standard, there's got to be something unique about it. And now let's talk AI.
What about AI? Is Tesla an AI play? I mean, Kathy Wood would tell you so. Elon Musk himself would tell you so. He talks about full self-driving. He talks about vehicles that go around in Texas and California for days without a person operating those vehicles. Where do they stand as an AI play and self-driving autonomous vehicles?
Yeah, I mean, obviously, Elon sort of, set the moonshot for automotive excellence when it comes to self-driving. Every automaker, I think, today is an AI company, just like I think that every tech company today is or has to be an AI company. But AI isn't limited to simply just the autonomous driving. There are a lot of other systems in the vehicle that leverage AI. So whether it's entertainment or communications or productivity or diagnostics, all of those things are going to require AI increasingly. And so, yes, absolutely, AI is a huge component of the Tesla story moving forward.
Tesla is one of the biggest players in AI around the world, and Elon Musk is the biggest factor in its growth story. Musk is one of the founders of OpenAI, an American company that develops ChatGPT, and according to him, ChatGPT showed just how far AI can go. ChatGPT is an advanced form of AI, based on a high-level model called GPT-3. It is also designed to understand human speech and generate responses based on a large amount of data. This technology is starting to make waves, and it could be the start of an even bigger AI solution. Following this database technique, Tesla is building its AI tech. Tesla is also the only company in the world to develop a general-purpose self-driving solution based on AI, and the automaker's FSD system is starting to reach new heights, with Tesla cars expected to be self-driving within a few years. One of Tesla's main goals is to make its vehicles unique, and the automaker is using big data and AI to achieve that. For these cars to drive themselves, self-driving cars will continuously interpret images from sensors and machine vision cameras, and then use that information to decide what to do next. They also use AI to recognize and predict next movements of cars, pedestrians, and cyclists. Also, for its cars to be truly autonomous, Tesla has got to collect the right amount of data and use that to train its algorithms and feed its AI. The data collected from these cars will help car users plan their movements from time to time and decide what to do each time. This means that more training data will inevitably lead to better performance, and this is where Tesla's got the advantage. Tesla's access to vast amounts of user data is one of the key competitive advantages. Data from Tesla's customer base has served the EV company since its inception, and its work on Tesla's self-driving cars is a part of its ongoing mission to put AI at the heart of everything it does. As Tesla celebrates its new projects, which include plans to transform the energy grid and home electronic panels, AI and big data will greatly help the company. At a previous AI conference held by the automaker, Elon Musk said Tesla is a company doing deep AI work at the decision-making and training level, and this technology can be used for applications beyond just self-driving cars. Many people think of Tesla as a car brand, but we think of the company as much more than that. In fact, Kathy Wood claims that Tesla is the biggest AI player. adding that AI will drive Tesla's stock price from less than $300 today to $2,000 by 2027, and driverless cars are going to drive this change. She also predicted that self-driving cars will generate nearly $10 billion in revenue, and that is going to be a pretty big worldwide effort, and it could reach that by 2038. This means only one thing: there is still a lot more revenue to be made by Tesla. Tesla is one of the most successful automobile companies, and it is certain that Elon Musk and his team are working hard to provide newer means of transportation and also newer sources of income. And we're going to be watching. What do you think about Morgan Stanley's forecast for Tesla? Let us know down below, and for more exciting updates on Tesla, go ahead and click on this next video on your screen. See you there.